announced his government will pause its gas tax for the summer. Daniel Smith's government is watching closely, but says it has other ways to help Albertans save money right now. As Tyson Fedor reports, critics say it's time to follow the feds.
The Prime Minister's first act with his now majority government was to suspend the federal gas excise tax.
This will remove up to 10 cents. The Minister of Natural Resources, we're announcing today that Canada's new government will temporarily suspend the federal fuel excise tax from next Monday until Labor Day.
Every time you fill up your tank lately, you've probably winced at the number on the pump. Gas prices in parts of Canada have shot up by more than 40 cents a litre since late February, and the federal government says it's now taking action. Starting next week, Ottawa is suspending the federal fuel excise tax. That means cheaper gas at the pump, at least for a while. But is it enough? And what's driving prices up in the first place? Let's break it all down. Before we get into the politics, let's cover the basics, because the term excise tax gets thrown around a lot. The federal fuel excise tax is a flat charge the federal government adds to every liter of gasoline and diesel sold in Canada. It's not a percentage, it's a fixed number. Since 1995, Ottawa has charged 10 cents per liter on regular gasoline. Diesel has been taxed at 4 cents per liter since 1987. This is separate from the provincial fuel tax, the GST, and the carbon price, all of which also show up in what you pay at the pump. So when you fill a 60-liter tank, the federal excise tax alone has been costing you $6 every single time. So why now? The timing isn't random. Since late February, there's been serious instability in global oil markets, and it traces back to rising tensions between the United States and Iran. Here's the geography that matters. Before we go further, if you're finding this breakdown useful, hit that like button right now. It takes 1 second, and it helps Canada 24/7 reach more Canadians who want clear, no-spin news coverage. And if you haven't subscribed yet, tap that button and hit the bell so you never miss a story that matters to you. The Strait of Hormuz is a narrow waterway between Iran and the Arabian Peninsula. It is the single most important choke point for global energy. About 1/5 of the entire world's oil and liquefied natural gas passes through it. When tensions flare in that region, shipments slow or stop entirely. And that's exactly what has been happening. With that supply constrained, prices spike on world markets, and Canadians feel it at the pump almost immediately. This isn't a made-in-Canada problem. It's a global shock landing on Canadian wallets. The Liberals weren't the only ones with a plan on the table. Conservative leader Pierre Poilievre brought his own opposition motion to the House of Commons on Tuesday, and it went further. Poilievre's proposal would eliminate not just the federal fuel excise tax, but also the GST on fuel and the clean fuel charge, all of it, until the end of this year. His team says that package would drop prices at the pump by about 25 cents per liter, more than double what the Liberals are offering. For a family of four, Poilievre argues that adds up to roughly $1,200 in savings for the rest of 2025. His plan carries a price tag too, $5.25 billion. He says that bill would be covered by cutting federal spending in other areas, specifically the gun buyback program and a proposed high-speed rail corridor between Toronto and Quebec City. Poilievre was blunt about the Liberal measure. He called it, quote, not good enough. The Liberals weren't the only ones with a plan on the table. Conservative leader Pierre Poilievre brought his own opposition motion to the House of Commons on Tuesday, and it went further. Poilievre's proposal would eliminate not just the federal fuel excise tax, but also the GST on fuel and the clean fuel charge, all of it, until the end of this year. His team says that package would drop prices at the pump by about 25 cents per liter, more than double what the Liberals are offering. For a family of four, Poilievre argues that adds up to roughly $1,200 in savings for the rest of 2025. His plan carries a price tag too, $5.25 billion. He says that bill would be covered by cutting federal spending in other areas, specifically the gun buyback program and a proposed high-speed rail corridor between Toronto and Quebec City. Poilievre was blunt about the Liberal measure. He called it, quote, not good enough. Let's put the two plans side by side so you can see exactly what's on offer. The Liberal plan cuts 10 cents per liter on gas. That's one tax, temporarily suspended for about 4.5 months. The Conservative plan would cut 3 separate charges: the excise tax, the GST on fuel, and the clean fuel charge, saving 25 cents per liter for the rest of the year. The trade-off? The Liberal plan is more targeted and fiscally cautious. The Conservative plan saves more money for drivers, but costs the federal treasury $5.25 billion, which Poilievre says he'd fund through spending cuts. Neither party is proposing a permanent solution. Both approaches are explicitly temporary. The core difference is how aggressive you want to be, and what you're willing to cut or forego to pay for it. One big question hanging over all of this: what happens in September? Is Labor Day really the end of the road for this relief? When Energy and Natural Resources Minister Tim Hodgson was pressed directly on CTV's Power Play about whether the suspension could be extended beyond Labor Day, he left the door open. He said the government would look at the situation as it exists in September, at the global energy landscape and the fiscal realities at that time. Crucially, Hodgson added that if the Strait of Hormuz remains blocked, meaning global supply stays constrained, Ottawa will, in his words, react in a pragmatic way. So while the official line is that this is temporary, the government is clearly signaling that it's not ruling out an extension. A lot will depend on what's happening in the Middle East and whether global oil markets stabilize between now and fall. So what does all of this actually mean for you? If you drive a regular passenger car and fill up once a week with a 60-liter tank, the Liberal tax suspension saves you about $6 per fill-up, roughly $100 to $110 over the 4.5-month period. That's real money, even if it's not transformational. If you drive a truck, run a small business, or haul anything with diesel, the impact is more modest at 4 cents per liter, but still meaningful over time. The bigger picture here is that Canada is caught between a global price shock it cannot control, driven by geopolitics halfway around the world, and a domestic debate about how much government should step in and how to pay for it. Both the Liberals and Conservatives agree that Canadians need relief. They disagree on how far to go. What's your take? Is 10 cents per liter enough, or should Ottawa go further? Let us know in the comments. If you found this breakdown useful, subscribe and stay with us. We'll keep tracking this story as the situation in the Middle East evolves and as September approaches.